Mode.
Hello, everyone. I'm Ernie Humphrey, the CEO of FP&A Webinars. I would like to thank everyone for taking the time to join us for our webinar today, Financial Reporting That Matters, the Marriage of IT and Finance. I would like to thank our webinar partner today, CXO Software, whose strong commitment to thought leadership helps make this webinar possible. Despite continuous advancements in ERP and CPM solutions functionality, creating and managing financial reporting is still challenging at best for companies of all sizes. Most companies continue to generate reports that fail to deliver financial intelligence. Today, you will discover what world-class business performance reporting means in today's world and how leading companies are aligning IT and finance to leverage leading technology to efficiently create reporting packages through a real-time collaborative process that empowers finance to communicate the story behind the numbers and impact decision-making across the enterprise. Before we delve into the content, I'm going to offer a few quick words about FP&A webinars, cover a few housekeeping items, and then welcome our featured speakers to the webinar. At FP&A Webinar, we offer webinars designed to empower FP&A success at companies of all sizes across all industries. We only do what we do best, which is webinars. Now for the exciting housekeeping items. For those of you interested in CTP or FP&A credit for today's webinar, you'll have to answer all the polling questions and remain on for the duration of the webinar. If you have any questions on CTP or FP&A credit, please send me an email to Ernie@360thoughtleadership.com. Again, questions on CTP or FP&A credit, send me an email to Ernie@360thoughtleadership.com. We'd like to hear from you today, so we encourage you to ask questions at any time in the questions area of your GoToWebinar control panel. We will do our best to get to your questions at the Q&A session at the tail end of the webinar. Fear not, if we do not get to your question, we will follow up with you directly after the webinar. You have a tremendous opportunity today with two renowned thought leaders in the area of business performance reporting, so I encourage you to take advantage of that opportunity by asking your questions. Finally, we appreciate your consideration in taking a short survey at the end of the webinar, as we always strive to improve the ROI we offer our event attendees for their valuable time. A quick run through of our agenda. We'll talk about some business performance reporting challenges, business reporting opportunities. We'll take a brief overview of the business performance reporting technology landscape. We'll hear a few business performance reporting success stories. We'll have an interactive conversation between our two featured speakers on the ROI of reporting done right, and then we'll wrap things up with our Q&A session. It is now my distinct pleasure to welcome our featured speakers, Dan Phillips and Bill Marchioni, to the webinar. Dan has led an impressive career in technology, sales, and marketing leadership over the course of the last 30 years. He's received several awards for top performance at AT&T, Nortel, and Lucent. He moved into financial software sales in 2012. He spent the last 5 years learning everything he could about the processes and technologies that support the Office of Finance through his experience at Trintech, Blackline, and now CXO Cockpit. Dan now leads North America sales for CXO Cockpit, joining the firm in 2017. He's a passion for serving customers, and his drive for sales excellence is second to none. And I can personally attest to that. Had many conversations with Dan. Our other featured speaker today is Bill Marchioni, Account to Report Advisory Global Program Leader. As Global Practice Leader for Hackett's Account to Report Executive Advisory Program, Bill provides CFOs, controllers, and other finance leaders with insight and analysis gained over 30 years work in public accounting, industry, and consulting. His expertise in the arenas of cost management, process reengineering, financial reporting, strategic planning, forecasting, and analysis. Prior to joining the Hackett Group, he served as CFO of a privately held diversified consumer products company. Prior to that, he held an executive level finance position in the industry. Bill is a CPA. He received his MBA from Emory University and his BS from New York University. With that, it is my pleasure to hand the floor over to Bill. Bill, the floor is yours. Please take it away.
Thank you, Ernie. As Ernie mentioned, my name is Bill Marchioni, and I lead Hackett's Account to Report Advisory Program. And it's a pleasure to be here today to share with you the Hackett Group's insights into what we're seeing in the business performance reporting space. What I'd like to do is take a couple of minutes up front and tell you a little bit about the Hackett Group and who we are and what we do. The Hackett Group is a global business advisory firm that helps organizations improve the efficiency and effectiveness of their G&A functions. And so we're talking primarily about finance, HR, IT, procurement, and to a lesser extent, corporate services. We've got three different service lines. The first is our benchmarking service line. And in the finance space, we like to believe that we're the gold standard. We've spent the last 25 years, give or take, in the data game, collecting data, analyzing data, data mining, and finding out what the data tells us about performance. We have another service line, which is transformation, your typical project work, boots on the ground type of service offering. And then we have an advisory service offering where organizations tap into us on a subscription basis to get our IP and other access to Hackett best practices and the like. If we go to the next page, what I really wanted to do here was spend a little bit of time focusing on this schematic that you see on the left-hand side, because this schematic is a visual portrayal of how we define world-class. And I think it's important to have some baseline or foundational understanding of how Hackett defines world-class, because, in the few minutes that we have here today, I'm going to be making a fair number of representations. Here's the metrics for world-class companies. Here is how world-class companies are using their service delivery model. Here's a story about a world-class company. And so it's important to just have some understanding of what that means. And first and foremost, our way of identifying world-class companies is based on the data, right? As I mentioned before, we do a lot of benchmarking. A benchmark is a 10 to 12-week exercise where we collect a tremendous amount of data. We go through statistical analysis and scrubbing. And so we're very confident that the data we have is accurate and comparable. The other thing to keep in mind is it's a balance of both efficiency and effectiveness. And our model is those organizations that are in the top quartile in both efficiency and effectiveness, we brand as world-class. And that's that box you see in the upper right-hand side. So probably the best way to think about this for purposes of this discussion is the world-class companies are the top 10% of companies out there. And then there's the other 90%, and we just refer to that other 90% as the peer group. And I think the third thing to keep in mind is that world-class is a point-in-time designation. It is not a lifetime designation. If you were to come to the Hackett Group and go through a benchmark and you were a high-performing organization and you were fortunate enough to be world-class, and we branded you world-class and you checked that box and you went on to other things and you did not continue to reinvest in your process, in about 4 years, you'd no longer be world-class. Because everybody's getting better, everybody's focusing on how do I leverage best practices, how do I leverage technology, how do I leverage my people to continue to improve the finance function and the account to report organization. So as we go through our conversation, again, keep three things in mind. World-class is quantitative, it's a balance of efficiency and effectiveness, and it is a point-in-time designation. And so, Ernie, with that, I'm going to turn it back to you for our first polling question.
Thank you very much, Bill. That background was extremely important. So in order to level set a little bit about the demographics of our audience and to tee up our conversation about business performance reporting, we're asking you to share with us what business performance reporting challenges does your organization have. You can select all that apply. So difficulty meeting the timing demands of everyone, the stakeholders, senior stakeholders, reliance on spreadsheets, heavy reliance, difficulty providing meaningful insights into the business reports, story behind the numbers. I know Dan will have much to share with us about that later in the presentation. Reporting bloat, too many reports, which is obviously a common issue across companies of all sizes, and we'll talk about that also later. And then the process just consumes too many resources. So I appreciate everyone's consideration in answering all of our polling questions today. So I'm going to go ahead, leave the polling question up for another 4 seconds or so. Then we're going to go ahead and take a quick peek at the results. Then we're going to get Bill's initial reaction, and then Bill will start to dive into his content and look at the gap in business performance reporting between the peer group and world class. So let's go ahead and close the polling question. Let's go ahead and take a quick look at the results. Reminder, you can select more than one. So 30% meeting timing demands. I expect that might be a little bit higher, that being in that seat myself in the past. Heavy reliance on spreadsheet, the technology, and then 49%. So my initial take here is I would have expected a little bit higher percentages, probably across the board. Bill, what are your initial thoughts here?
Yeah, I mean, I kind of shared that initially. In terms of meeting the demands of the company leaders, I would have expected that to be a little bit higher. So that's good news, for this particular group. I think one thing I would say relative to that is what we are seeing and hearing from our clients quite a bit is just the increasing demand that the internal customers are placing on them in terms of better quality information, more timely. If you think about our internal customers, if they're general managers and they're dealing with some real challenges, global competition, disruptive technologies, you name it. The other thing that just keep in mind, we're also hearing the comments about velocity, which is the speed with which people are demanding things. So for those who feel like they're meeting the demands of company leaders, great. I would just say that bar is going to move and has been moving. Other things that we typically see, and I can talk to, we've got almost half the folks saying the process consumes too many resources. I've got some metrics on that, and we can talk to that. And I think spreadsheets seem to dominate, good or bad. That does seem to be a common tool for a lot of folks. So I'll try and comment on these as we go through the next couple of slides. Yeah, thanks, Ernie. So I've got 2 or 3 slides here that begin to look at some of the metrics, right? And so what we're looking at here is a cycle time metric. And it's how long does it take to do that first wave of business performance reporting. This is not everything. It's what I like to refer to as whatever people, the terms they use, the blue book, the gray book, the CFO book. It is that package of financials that comes out each month that you deliver to the executives. Now, whether that's delivered digitally or in hard copy or some combination of the two, whether it's a push or a pull, those are different things, but it's that set of information. And what we find is that world-class companies do it about a day and a half faster, right? So, what does that mean? From an efficiency perspective, they have a day and a half, call it almost 2 days, where they can begin to be doing other things, right? When you think about it from an effectiveness perspective, I often think about the forecasting process for organizations. And let's use rolling forecast as an example. For that process, the monthly financial information is usually the trigger point to start that process, right? So if you can do that a day and a half faster, now you're beginning to add some effectiveness and some value there. So looking at it both from an efficiency and a effectiveness perspective. Ernie, if we go to the next slide. So what we're looking at here is the number of reports, right, on a normalized basis. And so the typical company out there has over 800 business performance reports that they do on a per billion in revenue basis. The world class is closer to 400, right? So they're right at about half the amount or the number of reports that are being produced. And that reflects a few things, right? That reflects, I think the world-class companies do a very, very good job, or certainly a better job, of understanding what are the information needs of my organization. They've sat down with the organization, they've understood it, and they've put together a reporting strategy and a reporting infrastructure that allows them to collect and provide data. They're much better at having single versions of the truth. They're much better at having governance around data. They've cleaned up their data. They've got master data management. And again, what they have done is, to a far greater extent, is gotten much more efficient in terms of what information do I have to deliver and how am I going to deliver it. And the peer group still continues to struggle with that And what I would say to folks is, again, as I alluded to after the polling question, we really expect those demands from internal customers to ratchet up. So one of the other things to keep in mind is the whole question around agility. How scalable is my current process? I may be functioning satisfactorily today, but do I have the agility should something happen, right? Should we go out and acquire a company and all of a sudden we've grown in size and the information needs are going to expand? Let's take a look at the resources involved in the process. And here we've got information around FTEs and as well as the cost on a per FTE basis. And what you'll see is that world-class companies operate with half the number of FTEs assigned to business performance reporting. Again, the things we've alluded to already, where they've done rationalization, they've got a better infrastructure in place to gather, collect, provide, and analyze data, and they're able to operate with fewer resources. Now, what you do with those resources, whether they're moved out of the business or they're redeployed or they're scaled to other things, that's a management decision. But the reality is there is a way to do effective business performance reporting without a tremendous amount of people. And the other thing, you look down at the bottom, and now we're looking at, well, how much does the world-class organizations pay on a per FTE basis? And they actually pay a premium. They pay about close to 15% more, 14, 15%. And that's because the nature of the work that they're asking folks to do is up the curve, right? They're not asking them to do a lot of collecting and compiling and massaging of data. They're asking them to work with the business and analyze. And so the ask of those individuals is different. The skill set that's necessary is different, and they're willing to pay for that on a per FTE basis. And Ernie, if we go to the next slide, this is the Hackett Account to Report service delivery model. And I wanted to take some time and go through this. And what this service delivery model is it's about controlling complexity. And when you think about complexity, there's controllable and non-controllable complexity. And what I mean by non-controllable complexity, there's certain things that we as finance professionals inherit that, in short, we don't control, right? So the nature of the goods and services that our organization provides, whether we're a B2B or B2C organization, what geographies are we in? What is the regulatory environment in which we have to operate? We don't control that. We have to live with it, but we don't control it. But everything in this circle, we control. We own the decisions on everything in this circle. So I want to go through and kind of just elaborate on each one of those. So technology. What technology decisions are we going to make? What tools are we going to invest in? Where are we going to apply automation? How robustly is that technology going to permeate throughout the entire enterprise? You have service design. Think of that as process design. What is my process going to look like? How am I going to serve internal customers? Where am I going to have key controls? The question of service placement. What am I going to do within the business unit? What am I going to have to do in corporate? What will I do in a global business services? Analytics and information management. We've already alluded to that. So what type of information does the business need? Will I have an information infrastructure in place with the standardization, the governance, the repositories, the tools to gather that information and provide it? And what types of analytical capabilities do I have and am I going to provide in the future? Organization and governance. Am I going to have end-to-end process ownership? How am I going to govern the aspects of the account to report organization or the business performance reporting? Service partnering, that's the whole question around, will I be using third parties? Or am I going to do this all with my own resources? So what is that equation? How does that work for us? And then human capital. What type of skill sets will I need in the future as I transform my organization, as I transform business performance reporting? What impact is that going to have on my talent needs? One of the questions that we have gotten from folks over the years is when they look at this service delivery model is, well, where should I start? It's a circle, right? It's not a line. There's not a beginning point and an ending point. And for many years, our advice to our clients was, it really doesn't matter where you start this process. Just make sure that your solution in design and in implementation, that all of these things are well thought out and working harmoniously. That was our talk track for a while, but our advice to our clients beginning about 2-3 years ago, we changed our tune, and we changed it very publicly, and really starting at our annual best practices conference. And we said, you need to start with an understanding of technology. There's a lot going on in the technology space, and you got to make sure you understand what that is, right? The old, I don't know what I don't know, can be very dangerous. And using myself as an example, I've been around for 25 plus years. I've got a team, and we're all the same way. We could go into a conference room, whiteboard what we think our process and our organization should look like based on what we know. And we're limited and have inadvertent blinders on because we're limited by what we know and what our past experience has been. And we may come up with something, and it could be far short of optimal. And so what we're saying to folks is, make sure that you understand what's going on from a technology perspective. It will help you design a much more robust solution. And then one other thing that I'd like to talk about on this is the human capital aspect of it, and that whole concept of being an employer of choice. And I know people like to invoke millennials quite a bit, so I might as well go ahead and do that. But if you think about the new entrants into the workforce, they've basically from birth have grown up with a tremendous amount of technology at their fingertips, and their ability to take a handheld and do all sorts of really cool stuff. That's the norm, and they expect that to be the case. And I think it's important when you're designing a process, when you're designing a solution, to realize that if you're living with a manual process, not only is that inefficient, and we saw that in the metrics, but I think it's going to make it a lot more difficult to attract and retain and develop kind of that next wave of individuals. If they come in and they're dropped with a whole bunch of paper on their desk, it's just not going to work, right? You will not be the place where people want to go. So that whole idea of making sure that your solutions are state of the art, I think is very critical. So with that, Ernie, I will turn it back to you.
Oh, thank you very much, Bill, for your tremendous insights. I love this slide here. We hear a lot about digital transformation. I always point out to my attendees slides that I would print out. This is definitely be one of those slides. So now it is my distinct pleasure to welcome our other featured speaker to the webinar today, Dan Phillips. He's going to really give us some compelling insights into where I think a lot of companies fall short. I call it conquering the last mile of business performance reporting, which is delivering the story that impacts decision. Dan, the floor is yours, my friend. Please take it away.
Thanks, Ernie. I really appreciate it. Can you see my screen okay?
Yes, sir.
All right, fantastic. And thanks, Bill. I feel so grateful to be able to work in an industry with such really bright folks and really experienced people. And Bill and the whole team at Hackett has been tremendously helpful to me in this journey over the last year with CXO and before that with both Trintech and Blackline. So thanks to you, Bill. I appreciate you front-ending this presentation. Just a little bit about CXO before we get into some of the thought leadership pieces, just so that you have somewhat of a perspective of where we're coming from. CXO has been an EPM reporting and dashboarding company now for a little over 10 years. The reason why many people in the States haven't heard of CXO is that they started in Europe, in the Netherlands, by basically a team of EPM experts. They were all folks, a bunch of folks from Hyperion that had a practice consulting with some of the leading companies in Europe, and they kept running into the same question. Can somebody please help me get information out of my very expensive EPM tool that somebody before me bought, and now I don't have any way of getting anything useful out of it? And so they hung up their shingle from consulting, basically sold the practice to Ernst & Young over in Amsterdam, and created CXO. We've recently changed our branding from CXO Cockpit to CXO Software, because it's more than just a cockpit. It's not only gives you that dashboarding and reporting capability, but with all the drill downs and analytics, it's just so much more now. So we're very, very proud of the fact that the vast majority of companies that we work with are very large multinationals. That's not to say that we don't add a tremendous amount of value to smaller regional firms, because we do. But these are just some examples of some of the folks that we've had the good fortune to work with and help them through their processes. So now on to a little bit about what you're really here for. Commercial's over. Bill had shown you these two slides, and I've just kind of concatenated them onto one, about the differences between peer and world class. Not to say the least, over the last 10 years that CXO's been in existence, we found the same things to be true. So it was really gratifying for us to see it quantified by such a predominant firm like Hackett. So wanted to recall your attention to that, and it brings on, kind of a simple question, really, and that is, why is this such a tough area? This last, kind of last mile, if you will. Why is this such a tough area in the Office of Finance? I know there's a large series of tools, from SAP and Oracle, IBM, Microsoft, Tagetik, OneStream, and now there's a whole host of folks that have joined the market as well. Taking that information, and in many cases, some relational data, some Excel data, how do you just deal with all of that? And today, the best tool that people use is basically Excel, because it's so flexible. What happens then is that there's a lot of work that gets done just to get the data from one set of systems into Excel, but then you have to take that data in Excel and massage it so that it all crossfits and actually makes sense. Then the next step typically is going through the distribution by email to get it validated by people, and maybe if you're lucky, get some commentary to go with the numbers. And then you get these final reports that are static. In many cases, they're printed. In other cases, they're just these massive Excel spreadsheets with a bazillion tabs and maybe a PowerPoint that goes with it. As you could tell, throughout this process, there's a lot of manual effort that has to take place. And certainly it would be a whole lot better use of people's time if those things could be automated and just basically have some kind of template-driven methodology to rely on every month. And so what's happened as a result is, with any gap in a market or gap in a process, lots of companies jump in to try to help. So the EPM vendors, which you see on the left, have pretty much gone through and created or bought, in many cases, tools that support their specific environment. None of these tools really will help you if you have an environment with multiple data sources. They really only work in their own particular, with their own particular data. And then you kind of flip over to the far right side, and people have attempted to use the traditional BI tools, the Tableaus, Power BI, Qlik, and others. And unfortunately, those tools, while they're really, really good at what they're designed to do, which is more transaction level data, they're not designed for finance. And so, as many of you know, the EPM structures are built on a multi-dimensional database. The BI tools were built to support relational databases like the ones you would get out of maybe a CRM system or an HRIS system or perhaps a manufacturing, ERP system. So they're not really, they don't really work as well in those multidimensional systems, because you basically have to take the data out and put it in a flat file before you can put it into a traditional BI tool, which kind of brings us back to the stuff in the middle. This is where, and I think you guys mentioned this in the first polling question, 60 some odd % of you were saying that, you're relying on spreadsheets a lot. And this is what most people do because they need that level of flexibility, or they're taking data from all of these places and dumping it into the only tool that they can manipulate themselves without having to get support from IT, which, not to take anything away from IT, but typically ends up adding time to the process. So with that, I think I need to turn this over to Ernie for our next polling question.
Yes, sir. Thank you very much. I've gone ahead and launched our next polling question. Just want to kind of level set and see where the audience is at in terms of the previous slide. So we're asking you to share with us which of the following tools your team uses to generate your monthly financial performance reports. Again, you can select all that apply. So we'll be able to see where you guys are at, and then we'll help drive the conversation that Dan has going forward. So again, I appreciate everyone's consideration in answering all of our polling questions. Those of you interested in CTP or FP&A credits, reminder, you'll have to answer all of our polling questions here today in order to be mindful of our time. I'm going to go ahead and close the polling question here in a few seconds. We're going to take a quick peek here. We're going to get Dan's initial results, and he's going to give us a little deeper dive and start to tell us how to move from more of a traditional reporting framework to that strategic framework and really kind of flip the time that you spend from so much on low value activity to high value activity. So let's go ahead and close that polling question, everyone. Let's go ahead and take a quick look at the results. Dan, looks like we've got 34% Oracle reporting tools. We've got 30% SAPs. We've got 86% Excel and PowerPoint, which is probably not surprising given you can select more than one. And we've got about 27% on the BI side. Anything stick out to you there? Is that about what you expected?
Actually, it is. The one obviously that's the most prominent is the Microsoft piece. I guess I'm a little surprised though that there's such a low percentage of folks that have tried the BI, and maybe that's because of the way we formulated the question, because I know a lot of people have tried it and they just found it terribly complex and time consuming in an end-to-end process to use. So maybe that's why we're at the 27% there. So kind of to hinge off what Ernie said, and this is where companies like ours can come to help. But effectively, I think Bill said it best. You're going to continue in this industry to get asked to do more, and you're going to get asked to do more with less. And so the notion of the triangle on the left, where you're spending tremendous amount of your reporting cycle time in prep with manual and repetitive tasks, and not a tremendous amount of time doing analysis and making recommendations, which is really what you went to school for and what you have all the years of experience for. It wasn't to be an Excel jockey. That is going to be forced into the triangle on the right. The amount of things that I mean, you're hearing all this in your companies today, right? Your CFOs are saying, we want you to be better business partners. We want you to get out there and understand the business. We want you to be more strategic. We want you to think more about how you could recommend better courses of action to the senior team so that we can make more intelligent decisions and not and make them based on data and not based on our gut feel. I think Bill mentioned earlier, it takes less time to do your reporting if you're world class, and part of that's because you're actually building less reports because you know what your team needs to be successful, and you know how to tell the story of operation and performance, and you end up being able to take that time that you save and put it into those other things that you're being asked to do on a daily basis. So what I'm going to do is take you through some examples that some of our customers have created, and you can see kind of how this whole story, this whole integrated story of performance comes to pass. And the notion here is that minimizing the repetitive manual tasks kind of comes at two ends of the reporting process. One is, as I mentioned in the slide earlier, all of your data sources. If there was a way to automatically be connected to those data sources and not have to ask IT to run a flat file or somebody to create a macro so that you can run a flat file out of your source systems, and then take that flat file and then upload that into Excel or import it into Excel so that you can get at the data to work with it, that would save a bunch of time. And then on the other end of the process, if you will, are the reports themselves. If those reports were standardized, if they were templated, such that once the data was in the system, the report could be instantly generated. These are the things that world-class companies enjoy because they've taken the time to really understand what's needed to run the business. And so you can see on this particular page, in the report that we have, there's several different sections there, and I'm just going to call out, a couple of them. The table on the left-hand side is, as you can see, is just your standard P&L, right? And in this particular view, we're comparing actual to budget, and then of course the variances, and then the graphic representation of the variances, right? So you can really very quickly identify where your issues might be stemming from. What we do then on the right is we have the ability to listen to the line items on the table, and so you remember that gross sales was highlighted. So we can provide trend analysis and then some deeper dives, right? So maybe you want to understand, is it a product problem? Is it a geography problem? Is it an entity problem? Is it a channel problem? Why is it that in this particular instance, gross sales is underrunning budget by 6% or almost 7%? And so this helps you to be able to see a trend as well as dig into the numbers a little bit deeper to see if you can isolate an area or a product or whatever the problem might be. And to support that, we have at the bottom the commentary, right? And so this would be notes that the regional, in this particular case, this company is set up by region. The regional controllers would provide insights into the overall P&L, and obviously you can even see here with the Americas one, it says overall sales performance is not good this month, but they think they have their problem, which was they had a bunch of strikes in their area, under control. So it wasn't a lack of orders so much as a lack of ability to fulfill, right? So then you can make better business decisions knowing that, right? As opposed to, well, the numbers are down, so maybe we need to increase our marketing spend, or maybe we need to increase our add some salespeople to the organization or whatever. That's not going to help this particular problem because the orders were there, but the strikes prevented people from getting everything out. And so that's a type of analysis that's available to you when you have the commentary. Another piece is that our FP&A organizations are being asked to do is be able to spend more time communicating to the business. But as we all know, you've got to be able to explain things to the business in a way that they can actually understand it. Most of the folks in business aren't as financially savvy as they should be. Certainly, they're not as financially savvy as we are. And so, as a result, you kind of have to walk them through stuff. And so, this is just a quick representation for us of how you build up an ROA analysis, right? And so ROA for this particular company was a huge deal for them. It was one of their primary KPIs that they decided they were going to focus on and get sorted out. And as you can see, it's not doing so hot. And so when you want to talk to perhaps a salesperson or a group of salespeople about ROA, I mean, salespeople don't care about ROA. They care about, getting revenue in and driving compensation for their family. But you have to be able to explain that, hey, ROA is a component of a couple of other indices. What are we doing for operating income and total assets? Well, obviously, the folks in sales don't have a whole lot that they can do to impact total assets, but they can impact operating income pretty significantly, because they generate gross margin, right? They can't handle too much in operating expenses other than their marketing expense and their travel expense. But at the end of the day, the big driver is gross sales. If you're not driving sales, as you ripple through this discussion, the senior leadership isn't going to get the ROA benefit that they need to have, and maybe that's something that's necessary in order to support the borrowing power for the industry. Here's another one. It just is a completely different kind of story, but again, it's satisfied by looking at the reports in a different kind of way. You'll see here that we don't have a commentary on this particular one. So there's no, English language dialogue that anybody's talking to, the senior team to tell them what happened. But in this particular case, Europe is running behind plan. And so, obviously it begs the question, well, why is Europe running behind plan? And so let's take a look at the FX impact, right? If we exclude the FX impact from each of the particular areas of the company, what does that do to our view of the European performance? And at the end of the day, you can tell that what you actually have here is the impact of Brexit, given the timing of this particular report, and the FX rates were all over the board. Right, and so it really wasn't an operational issue that they had in Europe, and therefore you wouldn't go make operational decisions. This is a short-term, exchange rate instance that was caused by the Brexit announcement, and it just happened to have a time at that particular point in the cycle. Here's a different example that is more closer to home in terms of having a commentary, but not at a point of view level like the first one we saw. This is at a line item level. And this particular report is one we made for a very, very large social media company out on the West Coast. They are particularly interested in scrutinizing expenses and or any element of the P&L that is outside of their threshold. And so what we've done here is to be able to reflect for them by segment, right? What the whole package is, and then where those issues are and why they are the way they are. And in an attempt to make it easier for the organization, they created an input sheet so that each one of the items that is outside of the threshold can very, very easily be commented on, and then those comments just flow into the bigger report that you saw a second ago. So completely different way of telling the story, but a story that needed to be told for them. They had to really kind of get their act together and have everybody understand that the reason why the thresholds were there was because they were driving an agenda for the business, and you needed to be able to explain why you weren't being able to comply with the thresholds that they had. Since it's all of our favorite time of the year, budget season, and if you're not in budget season, I'm sure that you're going to get there really soon. One of the things that this particular company did was they used predictive analytics to be able to put up guardrails kind of for their planning season. What you see in this chart on the left is just, again, it's another form of P&L, and what you see on the right are the major geographies, and that's how they organize their budget season. And so what I want to draw your attention to is this gray line or gray piece on the bottom here. This actually represents the business plan. All right, so the business plan volume, if you will. And you can see, like in USA, for example, you can see that the business plan, pretty much mirrored where the performance was right up until about third quarter. And then you get into the fourth quarter and there's this huge gap. Here's the business plan volume down here. And then, the expected performance is up here and the forecast performance is up here. So what is driving that? So literally what they did was they blew out the USA map, if you will, and said, look, here's our past performance, over the last couple of years, and look at the spikes that we have in the fourth quarter. I mean, this is when people buy our stuff. It's a very seasonally aligned revenue stream. And so it begs the question, why in the world wasn't the business plan set up to reflect that in the fourth quarter of 2017? So what they did was they took advantage of the tool that they're using and created a conversation between the corporate controller and the U.S. geography controller, and said, hey, what is going on here, and why is it that we're projecting sales is forecasting this huge spike in fourth quarter, but our business plan doesn't say we're going to have any of that. And so the dialogue takes place, within the tool, and it's very, very quick to get resolution to that. And as you can see, going on into 2018, it's projected to do the same thing, and they've got to get the business plan, sorted out to support that. So what this company does is it uses this predictive analytics tool to help during the business planning cycle to stop that kind of fluctuation. And so last but not least, really what we've got here at the end of the day is an ability to digitally create your whole board book. I think Bill referred to it as the gray book or the blue book or the board reports or whatever. Doing this, again, in that using templates is a way that very quickly, very easily, once the books are closed, all these templates would populate, and you would have, the beginnings of your report pretty much done. You might want to collect commentary, which I highly recommend to all of our customers. I think it's a great way to help enrich the data and help keep the business executives pointed in the right direction. But at the end of the day, it's a way that you can digitally represent this. And again, it's all about agility. How fast can you get this done in a very, very, very high quality way that tells a story to business so that decision makers can make decisions faster than your competition can make them. So just a couple of success stories. Yeah, this is a little bit more of a self-serving advertisement, but as an example, McDonald's Germany basically cut their close from 4 days to a half a day, and this is really meant to me. What they're saying is that their reporting cycle of close. The NN Group, which is a huge, it's actually the largest insurance, investing, and financial services organization in the Netherlands. They dropped theirs basically in half, right, from 15 days to 15th working day to the 8th. So this is something that they feel helps them tremendously in getting time to get the decision-making data that they need to drive their business forward. And last but not least, DSI has really done a great job. Moving from the 25th day, they were really struggling down to the 9th to get their reports ready. So I think there's the key message is don't do reports that you don't need to do, right? Which requires you to understand what the business needs to operate and what the operation can provide in order to tell the story of the business. Use a tool that you can minimize the amount of manual grunt work that you've got to do to actually get all this out, and then shorten that cycle time so that you can spend time doing better analysis, becoming a better business partner, providing better recommendations to the senior team. And with that, I think I turn it back over to Ernie.
Yes, sir. Thank you very much, Dan, for that compelling content. So let's go ahead and what we'll do is we'll combine our Q&A with our interactive panel discussion we had in order to be mindful of our time. First question, I'll direct your way, Bill. Had a few questions around your metrics. Can you give us a little bit of color around the demographics about how many company sample size and how those metrics are created, please?
Yeah, I can. I can't share actual numbers with you,
okay.
But they're, but depending on what metric we're talking about several hundred to 800 companies, that
okay.
type of thing. So let's give a wide range.
Okay.
Three to 400.
Okay.
One thing I didn't spend a lot of time talking about last time though is when we collect the data. Again, our benchmark it's not a 45-minute survey. It's a 10 to 12 week exercise that clients pay us to assist them to do. So they're committed to the quality of it, and then we go through a lot of the statistical analysis. And so we are highly confident that there's statistical significance to all of the data that we use with our clients, and they feel likewise too. So I think I'm not sure if I answered all of the question, but it is very much statistically valid.
Right. No, that's perfect. Bill, I'll go ahead and go back to you. We'll dig into a few of these metrics. So, we saw that the peer group, the first metric takes 2.4 days to report as opposed to 1 day. Could you give us your insights as to what you think is driving that difference, the one or two key things?
Yeah, the kind of the cycle time to report, it is a combination of factors, right? It is knowing what information is necessary and desired. So having that close communication with the internal stakeholders, being able to pivot and respond quickly, because those information needs will change. We all operate in very dynamic industries. Speed is important. Velocity is important. So I think the ability to move quickly is important, but very, the blocking and tackling that we talked about, rationalizing the number of reports. A lot of times we see organizations getting in the trap of, well, I've got this typical P&L that I'd like to provide, but business unit XYZ, he or she is a very powerful GM, and they want to see it slightly differently. And finance salutes and marches on, and then ends up with reporting bloat, right? So I think the ability to go through that process, and then all of the stuff below it, right? Which is, do I have a single version of the truth? Do I have clean data? Do I know where I'm going to get that data? Even if I have multiple places to go and get that data, do I know what those are, and do I have governance around that? So net, it's kind of a holistic answer to that question. Yeah.
Okay, fantastic. Dan, let me go ahead and bring you in here. So from your perspective, can companies still realize a lower cycle time and still deliver impactful reports in the process?
Oh, sure. And I mean, a couple of those examples at the end there are recent, right? And I think to Bill's point earlier, it's a journey, right? It's not going to go from reporting on day 25 to reporting on day 9 in 30 seconds or less, right? It's a process, and what happens over time is, in our case, in our customers, we help guide them through that process, each step of the way. And so there's kind of an unrealistic demand put on Excel and PowerPoint and the whole Microsoft suite, for that matter, that it really wasn't designed to do that. Although it's a really terrific and flexible tool, it does end up giving you situations where you can create anything anytime. And what happens, as Bill pointed out, is a lot of these companies have report bloat. They just they created it, so they keep producing it every month. And you turn around and 2, 3, 4 years down the road, you've got 1,200 reports that really people only look at 100 of them. So I think there's plenty to be done, and plenty that can be done even before you call me and talk to me about a tool like CXO software, because the whole master data management piece has to be done, where you've got good sources of data, they're clean sources of data, they're auditable sources of data, and you've gone through and you do understand what your senior team needs in order to be successful, so that you can drive the proper behavior.
Oh, thank you very much, sir. In order to be mindful of our time, unfortunately, I'm going to have to wrap up our Q&A session. I think what I'll probably do is I will have a conversation offline and produce an article that we can share with the audience and to everyone else around some of the other metrics we wanted to dive into just a little bit deeper. That being said, the depth of content offered was absolutely compelling, so I appreciate that. So a few closing thoughts as I launch our final polling question. I would like to thank our speakers today, Dan and Bill, for their great content and insight. So thank you very much, gentlemen. I'd like to thank our sponsors.
Thank you, Ernie.
My pleasure. And I'd like to thank our sponsors, CXO Software. We appreciate and share their commitment to thought leadership, which is evident in the great content and resources they also offer on the website. And please note you have the opportunity to request to be connected with our speakers via our post-webinar survey, which will launch immediately following the survey. So I encourage you to do so. And I'm going to go ahead and leave that polling question up. And finally, I would like to thank you, the audience, for your valuable time today. Please let us know what we can do better. And finally, to everyone, make the rest of your day great, everyone. Thank you very much.